Hello, this is Peter Affronti for Allendale's morning wake-up call for Friday, July 26th. As of right now, we have December corn down 3.5 cents to 4.17 and a quarter. November beans are down 9 3/4 cents to 10.69 3/4, and December Chicago wheat is down 1 1/4 cents to 5.61 and a quarter. All right, so let's start off with the corn today. Yesterday showed some signs of light fund short covering again by seeing moderate support right to 1030 and then seeing that support ease back the rest of the day. Strong weekly exports of over 1 million help to keep support even when funds ease back on buying. The high trades over the last 3 days have been 422.5, 423 3/4, and 423.5, which is showing that resistance is picking up once December corn reaches fair market value levels of the 420s. It is likely corn will remain stuck in a range, finding bargain buyers under 410, but is also active resistance in the 420s until some larger scale news is seen or fund short covering becomes more active. For the soybeans, weather maps should continue as the number one guiding factor for the beans for at least the next 2 weeks. And this morning's maps added small amounts of rain to the 1 to 5 day outlook and reduced heat slightly. So far, weather maps have followed what was mentioned in the weather section of our summer conference, which is that heat can be seen, but lasting aggressive heat is unlikely to last. Exports were also strong yesterday, over 900,000. 2 weeks in a row of solid improvement in exports. If next week is also strong, we might start to see some demand-related support in beans. Like corns, beans are just carving out a range, just less exact levels, somewhere between 1035 to 1080. Wheat. So last night, overseas wheat traded higher, and for our overnight factor trade, that is the number one. Exports yesterday were poor at just over 300,000. After a few strong weeks, exports have now slipped back again. Like corn and beans, the wheat market has turned a bit more sideways and choppy, but wheat may still keep a slight bearish bias as long as exports are slower than expected. For cattle, box beef came in. Choice was down 22. Select was up 115. So that packer cushion is now $2.38. We're seeing cash bids stronger than expected, with the packer cushion only up $2.38. Nebraska is bidding $1 higher at $1.97. Kansas and Texas bidding 50 cents lower at $1.90. Futures have narrowed the gap to cash, with futures now priced 50 cents under last week's cash trade. Box beef was higher. As always, we need to see at least 3 higher reports before looking for a new trend. We may see some supportive speculative trade, as we know cattle is a market that maintains about a 60-40% bias in being bullish, which is obviously due to low cattle numbers expected going forward. So if you have any questions, please give us a call here at 1-800-2-MARKETS. This is Peter Affronti for Allendale's morning wake-up call for Friday, July 26th.